Hello and welcome to the latest Accountancy Age Big Question. Today we focus on the Accountancy Age Top 50 survey. We've seen growth rates slow across the board. The firms have really got to knuckle down as we go forward into 2008 and 2009 in terms of dealing with the credit crunch and the economic slowdown. Today I'm joined by Jeremy Newman, BDO Stowe Hayward Managing Partner. Thanks for joining us, Jeremy.
Thank you.
And also Phil Shohet, KATO Consultancy Director.
Thank you.
First, we'll start off with you, Jeremy. The biggest, across the board, we've seen fee income of £9.2 billion in the latest Top 50 survey. Growth rates, though, have slowed. We've got 5.7% growth. The last 2 years, obviously, we've seen double-digit growth. The biggest firms have only posted their 2007 year-end figures, though, so obviously that doesn't represent the effects of the credit crunch. What do you think we're likely to see from the 2008 figures from the top firms?
Undoubtedly, we'll see growth in 2008 at a significantly lower level than we've seen in 2007, which itself, of course, was lower than 2006.
Yeah.
But part of the problem is we've got used to growth rates at a level that clearly are unsustainable. And if 5 years ago you'd have said to people, you know, your business is always going to grow at 5, 6, 7, 8% a year, everyone said that's fantastic, thank you very much indeed. Because we've had so many fast growth years, we've sort of got this expectation it ought to carry on like that, and you know, it's just not possible. And growth rates at 8, 10, 12% are not bad growth rates. You know, and certainly provide plenty of scope and opportunity.
Sure. I mean, obviously, BDO posted around 10% growth rate.
Yeah.
Its 2008 figures, obviously, is very healthy. Are you saying that we are likely to see a fall from the double-digit growth for the other firms, and with the ongoing effects of the credit crunch and the economic slowdown, that figure will, the growth rate will perhaps slow even further, maybe even stall or go into negative?
Well, I'm sure the growth rates will slow down. Different firms have a slightly different mixes of business, and if you look at our figures, for example, you'll see that our tax revenues grew by something north of 20-odd%, and whereas audit revenues grew by a bit over 3%.
Yeah.
So depending on the mix of your business, it's clearly going to have an impact on the overall growth rates. The four biggest firms have very significant consultancy income, which will also have had an impact. But there's no doubt that they are all likely to post slower growth in 2008, and I suspect will post slower growth in 2009. But I do think everyone will continue to post growth.
Yeah.
And as I say, whilst growth may be slowing, it is still growing. And growth is what provides the opportunities, even if it's not quite as fast as we're used to seeing.
Jeremy, we haven't got an IFRS or a Sarbox on the horizon, and a major regulatory change tends to drive fees for firms. Without that, what's going to sustain this growth, albeit a narrow growth going forward?
We've got other things driving it, though, haven't we? And I talked just a moment ago about the growth in tax revenues. That's clearly been fueled by significant changes in tax legislation and uncertainty over what's going to happen to tax legislation. Now, I'm not going to be a political pundit, but I would be astonished if there weren't further changes in tax legislation going forward, so that the tax business, it seems to me, will continue to be buoyant. And the credit crunch will throw up opportunities. Our restructuring businesses clearly will pick up a bit, and there will be opportunities for M&A activity from businesses that perhaps overstretch themselves on an assumption there would be continued growth, and now find that borrowing's a little bit tighter, and they need to realise some cash. So I'm hoping we'll see some corporate finance and M&A activity coming out of that, and restructuring activity. That, of course, will throw off a further tax activity and hopefully create a few new businesses that might generate a little bit of audit activity. It's longer lead times. Deals will take longer to happen.
Yeah.
Yes, and that's why the growth will be slower. But I still think there will be transactions.
But obviously the firms have been affected by the crunches effect on high-end corporate finance work. We've seen KPMG make some modest job cuts, but job cuts all the same in their corporate finance and transaction services arms. The other firms don't seem to have followed that lead. They have been accused in the past of being quite short-termist around their recruitment policies. Have they learnt from the past? Are they sticking by their staff? Because obviously it's very hard to recruit when things turn around.
Sure, and the answer is I hope so. And I have to say I was slightly surprised at the job cuts because the impression I'd had from conversations I've had with the other leading firms is that given the difficulty we all had in recruiting teams of people when the market was growing, that we would find ways to hold on to them rather than destroy the teams that we've carefully created and have to rebuild them. It is a real challenge for our commitment to our people that we've talked about to see whether we truly are committed to them or whether we're only committed to them in good times. And I hope the profession has learnt lessons and, will continue to be committed to its people. It's a very short-term expediency to lay off a lot of people and then struggle to recruit them afterwards.
Sure. Okay, Jeremy, thanks for joining us and helping us out, clear up some of those points. Phil, for some of the other firms in the top 50 that have posted 2008 year ends, we have seen growth rates slow for them. But you would imagine that with them not doing the high-end corporate finance work, that may actually be slightly worrying that perhaps a general economic slowdown has started to take effect. Surely that can only continue. Are you concerned that the firms outside of the top 6 are perhaps not prepared to deal with some of the issues their clients face going forward?
Well, clearly some of those firms haven't got the width of top 6 at the end of the day. Some of them have. But if you take the lower end of the top 50, they've got to get their act together in terms of being very supportive of clients and having that width. And I think there's going to be a lot of quasi-corporate finance work. I think there's going to be a lot of quasi-turnaround work, whether you call that insolvency or otherwise. It's just assisting the client through this downturn. And if it does hit a big R at the end of the day, then they can actually call upon their accountants to try and turn that business around. I mean, a lot of customers of these firms are running and have run over the years very, very inefficient businesses, but made money.
Yeah.
They're now having to get their actual production lines, whether it's a service industry or a manufacturing industry based client, together.
You have suggested in the past, Phil, that this isn't necessarily a point in time where in these economic conditions that the firm's fees should go down if they're clever or smart enough. Could you explain a bit more about that?
Well, I think some of the smarter firms, I think their actual fee income will go up. They've got the bedrock of all this recurring work. They know who the clients are that may be facing some difficulties. Fortunately, we are the only profession that know about the financial affairs of our client base, and we should be digging in on those at the end of the day, and where we should be ahead of the game. I mean, it's coincidental that even in a reasonably buoyant economy over the last 10 years, if one looks at the top 50, some 15 practices have disappeared from that top 50 of 10 years ago. Some very large ones like Anderson's, and we know what happened to them, but some smaller ones from the top end. And I think that trend will continue. And I think it will largely continue, A, because of succession problems, but B, they cannot support their client base in difficult waters.
So essentially, for some of those firms, if they don't turn themselves around and look at how they structure their own businesses, let alone their clients, they're due to be swallowed up, essentially.
I think they will have very great difficulty in seeing their way through the next 2 years.
Okay, Phil, Jeremy, thank you for joining me.
Thank you.
Thanks for watching. You can find out more about the Top 50 survey at accountancyage.com/top50. Join us again next week for the next Accountancy Age Big Question.